We stay on the economic data theme. And joining me now in New York with a closer look at what's behind the strong U.S. consumer confidence data is Lynn Franco, Director of the Conference Board Consumer Research Center, which publishes this report. Lynn, welcome back to the show. Good to see you there. Thank you very much. This confidence index figure has been on the rise for a reasonable amount of time. What makes this one any different than the ones we saw in the last couple of months?
Well, we're picking up sort of where we left in the fall, where we were gaining some momentum, which we sort of lost a little bit of steam in the winter with the fiscal cliff, the payroll tax hike, and then the sequester. So it seems that both business conditions and in particular employment, the stock market, and housing prices are all sort of boosting confidence. And we've had two rather large gains back to back, so we think it's sustainable.
In the last hour, we talked a lot about how the housing market has rebounded. And I guess my question is it the confidence that's helping perhaps housing, or is it the rise of housing prices that's helping consumer confidence?
I think what we're seeing is the rise in housing pricing is really helping consumer confidence. And given the fact that the values dropped so much following the recession and the financial crisis, it's no wonder that consumers have sort of been hesitant to be a little optimistic.
We've seen the jobs figures tick down ever so slightly in terms of the unemployment rate. So we know the job market is getting better. The stock market is getting better. But in terms of the health of the consumer, are they substantially healthier today than they were 5 years ago?
They're not substantially healthier. I think what we're seeing is sort of a comeback, or at least the beginnings of a comeback. You know, a reading of in the 70s is still pretty much a pessimistic type of consumer, but we've made a lot of progress in the past year, and it looks like the headwinds, at least this time, are a little bit more favorable.
When you look at the industries that are affected, when consumers feel good, they buy more washing machines, they buy more disposable income. Are there any particular sectors that you see on the horizon out there that you would say, hey, that's one area that consumers are likely going to start buying goods in?
Well, I think the fact that housing is coming back, and obviously, you know, we need to furnish the homes that we purchase, so any of those housing-related industries stand to benefit from the turnaround in spending and confidence.
You mentioned earlier that there are some concerns heading into the future, so I'll just ask you for one of them. What's the number one thing that you would worry about at night, or probably we should all worry about when you think about consumer and the confidence? Because right now, things seem pretty good.
Well, the key to confidence is the labor market, so we don't want to see hiring stall, because that could send a negative signal to consumers. But other than that, or barring some type of a shock, I think we're on more solid ground this time around. And we should begin to see a little bit of an uptick as the summer months approach.
As you look at the U.S. economy, you know, we talked about this earlier as well in another interview, but different parts of the country are performing differently. For example, the West Coast is very different than the Midwest, which is very different than the East Coast. When you look at consumer confidence, how would you separate consumer confidence regionally in the United States?
You know, you've got some regions that are doing much better. For instance, the West, South, Central, in particular, Texas has always been well above the national average. You've got other particular regions, the Pacific, because of California and what's happened there in the housing market that's sort of beginning to rebound. The same with Florida. So you're seeing really the states that really took hard hits in terms of housing and employment beginning to show some signs of life. Those that were less impacted have a little bit higher levels of confidence.
You know, for our international audience, some may be aware of this, but obviously consumer credit is very important. And I remember watching a newscast no more than probably 4 or 5 years ago on another network, of course, that talked a lot about how America's individual credit was getting pounded because of whether you defaulted on a home or defaulted on a credit card. Fast forward to where we are today, how are those consumers handling with bad credit? Are they part of the group that's gaining more confidence, or are they very much still need to fix their credit rating first?
Well, I think some of those folks probably still need to fix their credit ratings, but we have seen at least a positive note is that consumers are willing to take on a little bit more debt or a little bit more credit at the moment. So that's going to be good for spending. But, you know, there's still a ways to go. I mean, this is not sort of a euphoric consumer by any means at this point, but I think at least, you know, we're taking steps in the right direction.
I'm going to try to be positive here. So I'm going to try to fast forward this 6 months further into Christmas. Does this indicate perhaps that we're going to have a very strong Christmas, maybe one of the strongest in years?
I wouldn't say the strongest in years, but at least now, if we continue with this momentum, it's going to shape up to be a better Christmas than last year.
All right. Lynn Franco, Conference Board, live from New York. Thank you very much for joining us again.